Hey traders, this is Jeff from ZenTrader.ca. With the market update on Friday, we saw some selling right into the close that is out of characteristic for the recent market, and it could be the start of something, nothing ominous, a much welcome pullback, I think. And basically the whole point of this video is to kind of point out some things that I'm seeing which could illustrate that the markets are, as I said, getting ready to consolidate the recent move from mid-April to mid-May. And so basically when the market had this first dip down below 30, it's not a whole lot to worry about. We've seen it before and it's bounced back. We've seen it before and it's just gone right back up to 70, the 70 level, which means everything's fine. This market's going higher. And it ran into resistance at 60. So bullish markets oscillate between 40 and 80 with the occasional, nothing is perfect orderly, so you're going to have some of these, and it's our job to interpret whether this was a warning sign or not. As of right now, it's not. This in itself was not a warning sign. Coupled with the fact that we ran into resistance at 60, formed the lower high here, and we're just starting to see some other negative signs on the market, so I'm gonna go right to those. If you watch my videos regularly, you'll remember that back when we were up here, I made a note that this market can't go down until the positive DI crosses below the 80x. So the market goes up, up, up. Okay, this is a problem. But this in itself is not an end of the market rally signal. This is just something to be aware of. And so what I would be looking for, and keep in mind, the 4 EMA was outside the upper Keltner channel, so that in itself is a warning sign. So when it crosses back below through, that's another warning sign. So here's a couple warning signs that kind of stood out. So what we could be experiencing is just a counter trend move to the main trend, and with the main trend being up, and what has to happen is the positive DI will come back down, so will the ADX, and kind of reset the trend. And the positive and negatives will do this little dance like they did over here, while the ADX itself moves lower, so it'll move back down here to 20, 25. You want to see it get back down in the teens. Meanwhile, you want to watch to see how does this look? Is it a sideways to a orderly? Maybe pull back down here to the lower Keltner channel. You don't want to see anything too crazy. You've got a couple other signs here that the markets are tired. The 3-day 3-line break chart is negative for the NASDAQ and the Dow, which is right here. Wait. There. Here's the NASDAQ, and then you just saw the Dow. So it's our job to try to determine how far of a pullback could we get. What's it going to look like? So you could come back to the 50 MA. You could come all the way down to 200 MA and still be contained and orderly. So I think this is a good area to kind of watch to see. Another chart that I like to look at is the NASDAQ High-Low Index. And this is the NASDAQ, and inevitably when a market is in a strong rally, it will always come back eventually to the 32 EMA, very important. You can see here this was a strong move, and it nearly did, and then it basically topped out. The thing is that it's never the same. Like, things just never always look the same. So, I would say a minimum, we're coming back down here, and then we need to see how it reacts at the 50. It would be out of character for this market to not bounce here, and then that would be another thing that we would have to look at. I'll see where my timing signal is at when we come back down here. I think that's just about it. The only other thing I wanted to talk about was the TSX, and real quick, we were rejected at some pretty significant resistance, and we've been forming lower highs. So this is an area of concern, and this is going to be reflected in the gold market. So I would say the TSX and gold are at a critical point that they need to bounce, or they're going to see more selling.